Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastep Jr.
Hello and welcome back to the Ask Ralph Show. If this is your first time joining us, I say welcome to the show. My name is Ralph Eastep. I'm an accountant in Middletown, Delaware. And I do this show every week. I also have a podcast we put out there. So I'm glad you joined us. If you regularly listen to the program, I'd love to hear from you. I don't hear from a lot of people. And sometimes I wonder if anybody's even listening. So if you're listening, just drop me an email at ralph@askralph.com. Tell me what the show means to you, or if you've got an idea of something you want to talk about on the show, or heck, even if you want to be on the show, I'd love to hear from you. So you can send me an email at ralph@askralph.com, or even better, you can call our office at 302-659-6560. And if you call right now, I will get you a $50 gift certificate towards preparing your taxes for next year. You can't beat free money. So let's talk about something today, and that is what happens when you can't pay your taxes. Now, in practice, I hear a lot of this. A lot of times clients won't even come in and get their taxes done because they know they owe. So let's start off talking about, what is the best strategy when you either think you're going to owe or you know you're going to owe. And the big thing to do, even if you don't have enough money to pay the taxes, you still need to send your return in on time. And I can't stress this enough. And that's because there's two types of tax penalties. There's one for filing late and one for failing to pay. Well, and here's some statistics. For 2018, the penalty for filing late is 5% of the taxes owed for each month your return is late, up to a maximum of 25%. So if you owe $1,000, the maximum penalty is $250 or 25%. Now, that is the late filing penalty. There is also a late payment penalty. By comparison, is just 0.5% of the unpaid taxes due. So obviously, if you think about it, the big penalty is the one for not filing on time. So even if it's a terrible situation and you owe federal, you owe the state, whatever that is, you need to file on time. That's a very important thing to do. Okay, so let's say that you've done that. You've taken Ralph's good advice. And when I give advice, it's always good. And if you don't think it's good, well, then you're wrong. No, I'm just being funny. But seriously, take this advice and worst case scenario, file your taxes on time. It's crazy to me how many clients I see during the summer months, and I say to them, hey, how come you didn't file earlier? Well, I knew I was going to owe. So now all of a sudden, not only do they still owe, but now they owe a late filing penalty and a late payment penalty. But let's say we're past that. You filed your return. What do you do when you can't afford to pay it? And one of the first things you can do, there's some IRS alternatives, and then there's some, sort of like outside the box other alternatives. So from the IRS perspective, one of the first things you can do is set up a short-term payment extension. And that's where, let's say you need, maybe 4 months to pay. You can call the IRS and set up a payment plan. They call it a short-term payment extension. Now, they're still going to charge you that penalty and interest for not paying on time, but they're not going to come after you with collection activities. That's a short-term payment. The next option is what they call IRS installment agreement. And that's where if you can't pay your tax in full, but you can make a payment every month to the IRS, an installment agreement would be a great option. It's a tax payment plan. It lets you pay off your tax in monthly payments. There's different payment plans based on what your situation is. And they are as follows. You can have a guaranteed installment agreement. That's simply where you just take let's say you owe $10,000 in tax or less. You can pay the full amount back within 3 years. It's kind of it's a guarantee thing the IRS is going to do. Listen, the IRS wants you to pay them. They're not going to come after you if you have some sort of payment plan in place. And that's a guaranteed installment agreement. If it's less than $10,000 and you can pay it over 3 years, it's sort of a no-brainer. You go right onto the website, irs.gov, and fill out that thing. Second thing is a streamlined installment agreement. This is for anybody who owes $100,000 or less. And I know you're thinking, who in their right mind owes $100,000 to the IRS? Well, you'd be surprised. It allows you to pay off your tax debt in up to 84 months. Now, so that's the $100,000 rule. Now, if you owe $50,000 or less, you can apply for one of these streamlined installment agreements right online. If you can't do it online, then there's two options. You can file a Form 9465 and mail it to the IRS, or you can work with somebody like myself, or you can call the IRS directly. Now, If you owe more than $100,000, and I hope there's nobody listening to me right now that owes that, you'll probably have to either pay down the balance and or verify financial information in order to get an installment agreement. They're going to assign you to somebody. You're going to fall into somebody's basket, or what they call into their inventory. So you're going to need to work with them, and they're going to ask you for financial information because they want to make sure that you're going to pay them. And that may include, filing tax levies or liens against your property. You don't want to be there. There is another thing, where they'll partial payment installment agreement, but you've got to ask for that. Now, another thing you could do in general is do an offer and compromise. And I talked about that a few shows ago. So if you want to go back and listen to that, you can go back to our podcast library, the Ask Ralph podcast, wherever you get your podcast, and you can look for what's called an offer and compromise. And I did a great job of talking about that. The final thing you can do with the IRS is obtain what's called a hardship status, what they call a CNC status, which means basically currently not collectible. And in order to qualify for that, you have to prove that you don't have any resources to cover your tax bill. And, the IRS has a set of guidelines depending upon where you live, and they'll plug that into their formula. And basically, that doesn't mean it goes away. It just means they're not going to right now try to get the money from you. Now, another option, so outside the IRS options, these are sort of like the outside the box options. You can consider borrowing money from family and friends. Might not be friends anymore. Family might not be happy with you afterwards. But if you can pay them, you get the money from them to pay it off, you're going to avoid those penalties and interest from the IRS. Now, the other thing you can do is you can take out a loan. Like, let's say you own your home and you've got some equity in your home. You could consider getting a home equity loan to do that. Generally, the interest rates on those are going to be less than the interest rate the IRS is going to charge you. But now make sure that you understand the fine print on that, and that, you're going to be, at a lower interest rate, because, some people will say, well, I'll just pay it with a credit card. Well, that may not be the best option, because sometimes the IRS interest rate is actually lower than the rate charged by credit card companies. Worst case scenario, all things being equal, the final option is to file bankruptcy. And I'm not an attorney, so I'm not going to spend a lot of time talking about this. But generally, taxes are not dischargeable in bankruptcy for up to 3 years. So you really need to talk with an attorney about that and decide whether that is your best plan. Like I said, I'm not an attorney, so I'm not going to give you any legal advice. I don't pretend like I'm an attorney. I don't play an attorney on TV. But that certainly is an option, and that's what you want to, make an appointment and sit down with a bankruptcy attorney, somebody that really understands bankruptcy. And if you've got a tax situation in bankruptcy, you want to find an attorney that deals with that particular situation, because your average, run-of-the-mill bankruptcy attorney is not going to be all that up to date on the tax ramifications of bankruptcy. So I hope this particular topic was helpful. Again, I'm going to say it again. Make sure you file on time so you can avoid that up to 25% penalty. You might not be able to pay them, but at least get it filed. And that way you'll know how much you owe, and you can set up a payment plan to get it paid.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.